This video is brought to you by Blinkist. Go to blinkist.com/meetkevin to learn more. Hey everyone, Meet Kevin here. People are talking about the end of the Goldilocks period, the FUD that Bank of America says the mother of all crashes is coming. But what if they're all wrong? What if institutional investors like hedge funds who are all of a sudden dumping higher valuation companies like certain tech companies or consumer discretionary companies are making a big mistake? In this video, I'm going to go through specifically which stocks appear most primed for success going forward, specifically for what we see happening in the market with data that came out today. Let me show you why I'm noticing this pattern first. Let's go ahead and jump in over to Webull here and take a look. Just remember, folks, there is a Black Friday coupon code that does expire 11:59 p.m. on Friday for all of the amazing programs on building your wealth. Link down below. Okay, the first thing that we're noticing here, let's actually start with Etsy because it really helps get us started. So Etsy is up 5.9% today. It's at $296, all-time highs. One of the things that's wonderful about Etsy is it's not affected as much by supply constraints, as people can make products in their garages and send them out from there, not trying to ship things in from overseas. In some cases you are. Some Etsy products are obviously coming from overseas. But you're not as affected by supply chain constraints, and the consumer is going nuts for spending money. Let's do another example. Let's look at Nvidia. Nvidia is a company that has been perfectly navigating the supply crisis. The consumer is spending money on new computers, on new graphic cards. They're putting more of their things in the cloud, data services, right? Nvidia kills it in this space. Plus, expectations are, this was mind-blowing, expectations are that in the future, the metaverse could make up a substantial portion of sales, consumer-based sales in the future. Listen to this report from Morgan Stanley, okay? Morgan Stanley, metaverse gaming and NFTs could represent a 50 billion euro opportunity in the sector by 2030. NFTs and social gaming present two near-term opportunities for luxury brands, allowing them to monetize their vast intellectual property over decades by having essentially virtual and hybrid luxury goods. A hybrid luxury good would be, for example, like, oh, you bought a Prada purse, here's an NFT to go along with it, but if you want the NFT, you gotta pay X dollars more, and it proves that you have this in real life as well. Think about that, folks. Massive opportunities. The Nvidia play is all about the consumer and all about metaverse as well. Metaverse, a lot of people not super excited about it because they're like, how's this different from a video game? I get it. We can have different conversations about that. But think about this. Morgan Stanley expects that by 2030, luxury brands could expand their total addressable market for revenue by more than 10% and their bottom line by more than 25% thanks to the metaverse. Let's look at another one. Let's look at somebody who's also navigating the supply crisis decently well. But first, a note from our sponsor. So you might not know this, but I love the book Good to Great. I talk about it all the time on my channel. I also talk about it a lot in person, which I think sometimes I annoy the people around me because I keep bringing up references to it. But here's the thing. If you don't have hours to spend reading books or even listening to books, which when you listen to them, you probably only have to pay attention anyway, which is a problem because then it's kind of like, what are you doing? Anyway, then you should honestly check out Blinkist. Blinkist will give you a 15-minute version of all the best books on the market. That way you can get all of the core ideas from books like Good to Great without having to spend the time reading it or listening to it. You're spending 15 minutes, which is way better than spending 4 or 6 hours or more sometimes. Folks, this is really, really important because books like Good to Great have changed my perspective on how to run a business, and I highly recommend you check that one out. Use Blinkist, especially if you're short on time. And you can get started with Blinkist with 4 easy steps. The first thing that you should do is download their app, Blinkist. Then pick a category. They have a wide selection of categories to choose from, like politics, productivity, technology, entrepreneurship, investments, and more. Add a category to your library and create an account. That's it. In fact, if you want to get a discount, you want to get 25% off and a 7-day free trial off of a premium membership, then go to metkevin.com/Blinkist and use that link, either metkevin.com/Blinkist or the link in the description down below. And so that way, when you sign up, you'll get 25% off a premium membership if you decide you like it after 7 days. In the meantime, I'd highly recommend you go to metkevin.com/Blinkist though, try it for 7 days, and if you don't like it, hey, no harm, no foul. But I have a feeling you're gonna love it because what I do every single day is read. Reading is very, very important. If you've got a busy lifestyle like most of us do, Blinkist. Go to metkevin.com/Blinkist. So go sign up, go listen to Good to Great during your 7-day free trial. You can read or listen to the 15-minute version before the trial expires. Let me know what you thought about Good to Great. metkevin.com/Apple. Look at this, folks. Apple, all-time highs right now, and directly correlated with consumer spending. Affirm, off of its all-time highs, but still at record highs, setting up a cup and handle, and 3.4% on the day. Let's do another one. Let's look at Amazon. Day chart for Amazon, folks. We are at all-time highs for Amazon. Facebook, which advertises to consumers, has had a little bit of pain, but it's trending up again. Trade Desk has been fluctuating the last few days, but in the grand scheme of things, has been on an uptrend, especially in the recent couple months here. Now, what do all of these so far have in common? They're all reliant on the consumer spending stuff. Etsy, Affirm, Apple, Amazon, Facebook, Trade Desk, which is basically companies' willingness to spend money on advertising, right? It all comes down to the consumer. Let me show you a company that doesn't really care as much about the consumer. Let's go to Nvidia. Okay, and I don't want to say that their company doesn't care about the consumer, but this is not you wouldn't buy this company to get exposure to consumer spending, right? And so not a surprise, it's down. Let's look at ARC-G, for example. ARC-G, okay? ARC Genomics, there you go. You're not a consumer play. The market doesn't seem to care right now. But wait a minute, Kevin. If you're trying to suggest that the market really only cares about the consumer right now, why is it that PayPal is down as much as it is? Wouldn't this be payment processing? Yes, but PayPal, one of the reasons it's substantially been falling is because of lockdowns starting in Europe. And so the companies that are doing well, imagine this again, the online ones like Etsy, Affirm, Apple, and Amazon, Facebook, and Trade Desk, the online consumer spending sector is absolutely killing it because you have COVID fears and lockdown fears surging again. So PayPal and Square are getting killed. Small businesses are often the first ones to lock down. That's why Square is at the bottom of its channel. PayPal is falling off a cliff. It's also why you've got companies like, and this is a combination of COVID fears and not just COVID fears, but also supply chain issues and not so great earnings numbers. Look at Nordstrom's. As soon as a stock proves that, wait a minute, the consumer is not here because we either don't have the supply or for whatever reason the consumer isn't coming to the mall, Nordstrom down 29% today, Gap down 23% today, Macy's down 6.1% today. Folks, the theme in this market is crystal freaking clear. It's where is the consumer spending money? And those are the stocks that are absolutely killing it right now. Ask yourself about other companies or other sectors that aren't doing so hot. Like, for example, look at real estate or real estate lending. Well, there are expectations that if rates go up in 2022, real estate prices potentially come down and refinancing or loan activity will fall. It makes sense why companies like Redfin and Zillow, with the exception of Zillow's like crazy stupid failure, it makes sense why they're rotating down. And it also makes sense why these consumer stocks are rotating up. But why? What happened this morning? Well, get this, folks. Okay, this was wild, this data this morning. This morning, and this was totally anti my expectation, but it's really, really good news, especially for them consumer stocks, okay? Here's the news. So this morning, U.S. personal spending exceeded expectations. We came in at 1.3% month-over-month growth in consumer spending. Folks, this is without unemployment payments in October. This is without a stimulus check in October. Sure, we've got the child tax credit, but we are at a higher level of consumer spending in October than I would say 98% of months that came before it. These are all little months going back to the 90s. Look at that. I draw a line at the top here. Maybe there's 1 month over here. This looks like it's probably somewhere in like '04 or something like that. But folks, this is big. This is a really good shift in spending. On top of that, we get unemployment claims coming in $70,000 below expectations at 199,000 weekly unemployment claims. That is the lowest amount of unemployment claims that we've had since 1969. That's insane. What does this mean? It means people are working, people have money, and folks, people aren't saving it, they're spending it. The personal savings rate is falling. People are spending their money. And so, folks, what is the stock market doing? It is so crystal clear. It is rotating very clearly, and it has been rotating very clearly to where the consumer is and where the consumer can stay. Because you might, for example, think, well, the consumer's going to be and stay at a company like Target. Yeah, look, probably. Target, Walmart are great companies. They've also upped their online presence. So has Macy's, quite frankly, or Saks at Fifth. Their online divisions are killing it. But there are also temporary concerns about travel and COVID restrictions that are potentially going to hurt things like restaurants and really retail. And this is why I think we're seeing this absolute explosion in consumer-based stocks. That's where this market is going. And quite frankly, it could keep going. You could sit around and hope for a big dip. Quite frankly, I hope for a dip as well. But you might be tricking yourself because the reality is we've got a huge amount of people with a huge amount of money, and they're spending it despite the fact that inflation is up. If anything, it's entirely possible that because inflation expectations are so high, people are like, let me spend money before prices go up. Which reminds me, the prices go up for my programs on building your wealth. Link down below, Friday at 11:59 p.m. So check out those programs if you like my perspective, want to join course member live streams, or take advantage of all the buy-sell notifications when you join Stocks and Psychology of Money. Live streams come with all of the courses, with the exception of yet the brand new one. We just released a brand new one, but that content is coming, and then we'll get everyone set up. But anyway, check those programs out, link down below. Folks, thank you so much for watching this video. If you found it helpful, consider sharing it, and we'll see you in the next one. Thanks. Bye.